Everybody. It is Thursday, April 24th. We have a jam-packed show today. I'm very excited. Obviously, Shay is back. And we're also joined by Andrew McCormick, head of eToro US. And we're going to have Daniel Newman popping by later, as well as Olivier Roussy Newton, who is the CEO of DeFi Tech. So lots going on. Andrew, how are you doing? Welcome to the show.
Yeah, thanks so much, Katie, Shay, Stocktwits. Thanks for having me on the show today. It's a great honor. And of course, big shout out to Stocktwits for all they do to make investing more exciting, engaging, and accessible for everybody.
Amazing. And Shay, good to see you. I know you were off yesterday. You're right up the street, I think, from me.
This is my first episode as a New Yorker, so
what?
Right.
Amazing. Well, it's good to have you back. I think we want to kick off, Andrew. We got some questions for you. Next week is a big week for us at Stocktwits and for eToro. We got the Hashtag Awards coming up. So let's get into that in a little bit. But I want to start with you. Tell us a little bit about yourself. And I'm sure everyone's familiar with eToro, but feel free to give the overview of eToro as well.
Yeah, sure thing. So I have the joy and honor of being the head of eToro US, and much like Stocktwits, eToro is passionate about making and investing more accessible and engaging, and really like focusing on the idea of community, right? Like if you're trading and you're looking for ideas and inspiration and want to talk about these things, come to Stocktwits, come to eToro. And eToro, you can talk about investing, but also make your investments there in the same spot. And it's all about just breaking down barriers and doing things as a community.
Yeah. I also read that you used to work as a high stakes lawyer. How is that, and how did you kind of turn that into where you're at today?
Yeah, so I was a lawyer 15 years, always in financial services. My heartbeat has always been a non-lawyerly lawyer. I was never like the intense, scary guy, you know, like bright colors and having fun and creativity, but passionate about capital markets, passionate about investing and making it something accessible for Main Street. So ended up at eToro 3 years ago. Super thankful for the opportunity. Came out of Wall Street, and I've loved every moment of it. It's a great place. We're doing great things to just break down those barriers and make investing just more accessible and hopefully make finance fun. That's like my heartbeat, especially.
We definitely have fun on this show. Sometimes we have too much fun, and we have to check it. We get on tangents sometimes. We were joking yesterday because Shay had a hot take on the CoreWeave IPO, and then I was in Times Square and noticed there's a giant billboard right by where he's staying. So you're just getting trolled, Shay.
Nice.
They knew you were coming.
The middleman is vicious. Middleman is vicious for sure.
They got you though. It's like, touche. Well done. Big IR budget over there. So let's go back to this notion of community, because you guys were really one of the first, I think, to have the brokerage with the social. I actually used to work at Public, and we were after you guys. Similar concept. But why do you think the community aspect of trading and investing is so important right now, given how quickly things are moving, how volatile things are?
Yeah. So look, life is better and more fun when we do stuff together, right? And whether you're looking for recipes, parenting tips, travel tips, like you go to social media for ideas and inspiration and get feedback in real time, and especially from people you like know and trust. And that's what, that's the heartbeat of eToro, right? Where you can like see people and see their ideas, but also see the actual investments they're making, what they're holding. And it has that like legitimacy, that transparency is super valuable. And it's obviously like a chaotic, loud, noisy era in human history. And to be able to turn to the group, the community, I think is generally like smarter than any of us as an individual. And that's like that's priceless. Whether it's finance, travel, parenting, that's what we do in normal life, and that should include finance. So
Yeah. Another thing that I love that you guys do is you're very generous with data that you share out and research, and you obviously invest a lot of time in studying your community, studying your users, and sharing that aggregate anonymized data out to kind of help the industry understand trends overall in retail investors. And I'm wondering if you've ever done any research around like just how big the influence of social is for this community.
yeah, that's spot on. So yeah, data is everything, right? And it adds legitimacy and transparency, and is helpful for everybody. So we do regular surveys called the Retail Investor Beat, where we're going to thousands of retail investors and asking what they care about, what's driving them, what are they worried about. And in some of those prior surveys, we asked that very question of, in your investing journey, how often are you turning to social media? And what we found is 80% of respondents say they look to social media for investment ideas and guidance. And I think that's like super powerful, right?
Yeah.
And I think that number is only going to grow, I think, especially as this idea of walking into a financial advisor's office becomes more of a relic of the past. You open up your phone, you ask your friends, your community for your ideas and inspiration, and that's exciting, I think.
Yeah, it's interesting too. A lot of financial advisors now are trying to be more like Shy. Like they're building social presences, and so they know they need to go the other way to even be on the radar. It's definitely a lot of interesting trends there. And just keeping on the data angle, fascinating front row seat you have, having purview onto this data and having access to this community throughout what has been probably some of the craziest times
Yes.
in recent memory in the stock market. Anything particularly sticking out to you in terms of user behavior preferences over the last few weeks?
Yeah, it's been quite a ride. I was hoping for a really quiet and boring 2025, but that has certainly not happened. What we see, unsurprisingly, I think, is that retail investors, it's a tough crowd. It's a resilient bunch, and usually it's pretty optimistic. And during the past month of extreme volatility, retail investors are doing what I, as a child of the 90s, like to call, they're taking the instinct of response to these big market downturns because they keep just they buy, buy the dip.
I was wondering where that was going.
Oh, yeah, I always will like laser it on 90s, like
Yeah.
especially boy band like
Oh
references.
yeah.
But that's truly like what we're seeing, this instinct response, right? Like huge markets are, downturned. I think people are seeing like this is an opportunity, right?
Yeah.
Especially retail investors today probably remember the financial crisis in '08, huge market rally. They certainly remember the COVID like huge decrease, huge market rally. So it could be a great buying opportunity for your favorite stocks that are a bit on sale. There's certainly been a little less buying the dip in the last week or two because there's only so many times you can keep buying the dip. But that response is still there. And even some of the surveys we mentioned, I think we see about 75% of investors are either buying a dip or staying flat and are not selling in this moment. So it's cool to see. I think retail investors, they get it. Like this is an opportunity. Yeah, it's painful. Yeah, it hurts. But long term, capital markets typically go up, right? And it's a
Yeah.
good opportunity for people to, Justin Timberlake or not, buy the dip.
Well, I was gonna say, Andrew, do you have a favorite member of NSYNC?
Uh, Look, I mean, this is controversial. I think I would be more of a Backstreet Boys fan back in the day.
Same. Same.
That definitely went on the script. But I mean, look, I'm a big fan of them all. If they
Yeah.
ever if they ever send me an invite to be the sixth member, I'll pick up the phone and join for sure.
I could see you like pop it in 98 degrees or something like that.
right.
I'm a huge
Okay.
Backstreet
All right.
Yeah, I'm gonna actually see them at the Sphere. I've seen them in concert,
Wow.
like,
Okay.
but
Amazing.
my favorite, what I did with the boy bands is I always pick the one that no one else liked because in my
Okay.
mind I was like, there's less competition.
Okay. So this
Because
is like
I actually
Howie,
thought I had a chance, so I was like,
Chris
oh, Howie,
Kirkpatrick. Yeah.
Howie and Chris, you
Howie.
got it. You know
No,
your
no
stuff.
offense to Chris and Howie, but they are like the last guy on the tour.
All my friends were like Nick, Brian. And I'm like, no, Howie, that's my guy.
Love it.
Shy, do you have any favorite boy band members?
Oh, yeah, I love Justin Timberlake.
Yeah, he's good.
JT's my boy.
I will say JC Chazé. I feel like he should have been the breakout star. I feel
Yeah.
like he kind of got, you know.
He's like better singer and he's like maybe more talented, but something. I think it was like the neon yellow hair Justin Timberlake had, the ramen noodle
Yes.
hair that took him to the roof, you know.
I'm gonna blame Lou Pearlman for everything. Well, that's fascinating. I love the bye bye bye. I'm not. That's in my brain now. So next week, so Shai's in New York for the Hashtag Awards. Are you going to be popping by as we sort of herald and celebrate the best of social investing next week?
Yeah, absolutely. There's no way I'd miss it. First, like I'm 42 and I have 4 kids, so I don't have much of a social life. So like I'm always excited to get out and have some fun, laugh at some jokes, eat some food, drink some drinks, and hang out with some wonderful people, and of course like have a fun night celebrating this tremendous spirit and hustle of the retail investor. Like in the course of human history, there's no better time to be a retail investor than today, and that's certainly something to celebrate.
Yeah, it does feel that way with the trend you shared. Like there's a lot of resilience. And I feel like on social media, sometimes we're just tweeting our way through it and the memes almost sort of help us cope. But really, we're holding on, even though we're sharing funny things out and making jokes. And I know we obviously appreciate so much eToro's support for the awards. And I know the two companies go back, right? You guys have some ties to Stocktwits.
Yeah, long history. Our founders are friends and go back a long ways, and we're always looking for ways to collaborate together and work together because I think we have the same DNA, same spirit. Just want to break down those barriers and make investing more accessible and engaging, and again, hopefully fun. And so we're super proud and honored to sponsor the very first inaugural Hashtag Awards.
Amazing.
I love my leather jackets on that reel because I wore it one time for the Jensen NVIDIA earnings as like a little fanboying. So I am not that kind of an LA douche, everyone. Like I do not wear the leather jacket at 5:30 in the morning.
You look like Danny Zuko from Greece. Just like pop in.
I know my fiance is like my chin is way too aggressive to ever wear a leather jacket. So I agree with that statement she made.
Well, Andrew, we can't wait to see you. Oh my God, that's hilarious! I never saw that.
It's like the Fonz.
Literally the Fonz. Well, Shy will be wearing it next week, and we're gonna add some Backstreet Boys to the playlist. So hopefully, bring your moves, bring the choreo.
Let's do it. All right.
It's great to have you, Andrew.
Likewise. Take care, everyone.
Bye. And we are gonna bring in our good buddy Daniel Newman. He has been following a lot of the Oh, hello. How are you?
I'm like Donnie Wahlberg, of the of the
NKOB.
like they kind of like wasn't good enough to have the solo like Marky Mark. Wasn't really the back. He was a new kid. It wasn't the new kid that anybody really remembered either.
Yeah.
But like,
yeah,
was already balding while he was doing the boy band thing. Where I was like, what's going on with that guy? How did he get in the band? That would have been me.
Was he the one? He was in and out of jail and stuff. He was the bad like NKOB was the bad.
That's Mark Wahlberg's brother. But I just know he was like already had like a receding hairline when he was supposed to be like a like an idol to the young ladies. But he was like 40. He was like graying, and like somehow got in the boy band. That's me. So anyways, I don't got the shy locks. Call them shy locks.
Yeah.
But the leather jacket would be ridiculous on you.
Yeah. Our producer just pointed out something very astute.
Even when you try to like do your Dan Ives thing, I think you're just too clean. You're just too clean. You dress up nice. I see you on those TV hits. Put the tie on. That looks good on you.
Wear the leather on Fox Business. Switch it. They love that. They'll love that. You kidding me?
I don't know.
Views?
I love those guys over there, but it's pretty traditional. You don't see you see a lot of ties, shirts.
You see the leather with the tie.
Yeah, pull that off.
Something for everyone. Maybe save it for like a Newsmax or NewsNation. They probably don't care. Daniel, how have you been? It's been a couple of weeks, and I feel like a lot has happened. How are you feeling, bud?
It's been incredible. I use the word whipsaw. It's we're going up, we're going down. I heard what Andrew was saying about buy. I obviously have my role as an advisor to hundreds of these CEOs and these tech companies, and it's been madness. And there's a lot of bifurcation. There's these companies that they've basically been whispering in my ear. They're like, we're not going on TV. We're not going to say anything. We are absolutely have nothing we want to say right now about what's going on, all the uncertainty. And yesterday I talked to Bill McDermott, CEO at ServiceNow. I talked to him. And I'm like, you gonna go on TV? He's like, I'm going on Liz Clayman, I'm going on Kramer, and he's like, he's living the dream. And I've been having this thesis that, enterprise AI is absolutely gonna be the outperformer right now. You stay away from shipping goods, you stay away from the consumer, and you help companies with massive operating leverage get more operating leverage. I'm investing, but that's really, if I'm looking at everything I'm doing right now, I'm going right there, and I'm staying completely on the sidelines on those other things where you got tariff impacts and you've got consumer shock. But I'm feeling optimistic for those enterprise AI names.
Well, I think it's because you highlighted a really good, interesting point where the fourth industrial revolution is happening regardless of what the East versus West bickering battle is. That is inevitable. So the progress to capture that isn't going to go on pause because there is some kind of a high stakes poker game being played right now. It's absolutely not going to be the case. Where software or enterprise AI, it's going to become the control layer of how enterprises use AI, and they have to invest as much as possible, as quickly as possible, or they'll be left behind. And you mentioned Bill from ServiceNow. The reason he's going on these media circuit is because his product, it's tier one, and
he's crushing it.
Those results, that's
he's crushing it.
But
let's be really clear too. Bill is one of the most optimistic and charismatic CEOs on the planet. He just absolutely is. But he would be one of those CEOs that probably would go on even if things were a disaster, because there are just those types that are willing to face the music. The thing is when you are able to drive the kind of culture they drive there and the kind of optimism within sales and within marketing and within product, you just don't tend to have those downswings. And it's been pretty remarkable. What was so fun about that conversation, I actually talked to the CFO of IBM as well, having a conversation with the CEO of Intel too, Lip Bhutan. I have to come and talk about that later because they haven't reported yet, but there's gonna be some interesting implications there. But with Bill, the gloves came off this quarter. The gloves came off. So for the longest time, ServiceNow has been one of these companies that's coexisted. You can still buy Salesforce and use ServiceNow. You can still buy Workday and use ServiceNow. You can still buy, any of the analytics platforms, Snowflake. Well, they're like, you know what? We've got a DB. Yeah, sure, we can integrate with that. You want to use all these different agentic platforms? You can use our, A to A. You can use MCP. You use our agentic platform, our control tower, and you do not need all this. So the software industrial complex is literally coming down in his whole talk track. And it's going to come back to a complete reordering of how people buy, consume software. Mm-hmm. And they're so well positioned. They just crossed $3 billion this quarter. The company can basically be the agent orchestration layer between infrastructure, platform, and application. And instead of having 25 different agentic offerings that you use with every enterprise software you use, they're basically just use us. The gloves are off, which is crazy, because for the longest time, ServiceNow has just kind of quietly coexisted.
Well, no, I think it's funny that that was your read, because before the show started, I was telling the producers and also Katie, ServiceNow, I think, might be stepping in Salesforce's feet now. Because everyone's they're trying to become there might be the first SaaS company to really show we're seeing the AI flow right now, and the tailwind is flowing through our fundamentals.
Well, Bill actually said it. He said it. So for the first time, he said, we've always said we can coexist with everyone. And he basically said that, may not be the case going forward.
No, yeah, he's redoing the structure of what enterprise IT will be, and not just IT. The middleman in enterprise software should be worried. If this is a sign of where ServiceNow talked about yesterday, the CRMs out there they should be very worried because they were always the middleman. You didn't really need them, but it was nice to have. If point A to point B are starting to change things where why do we need the middleman anymore? Just control the whole stack.
Yeah, we've evaluated our team has evaluated the entire agent offering stack, and on the early era, like we had really high marks for like Agent Force, and we still like it as a point solution. But having said that, as you saw what Google came out with at its Cloud Next event, you saw what ServiceNow is trying to do with its control tower and orchestration and the Now platform. I do think increasingly there is a case to be made that you want an orchestration layer. You don't want to be putting your agents in every application, and I think it's going to be a battle. I think people will use those other softwares. I've been saying for a long time, it'll become like these deprecated software stacks that will basically they'll become calls with an API. We're using a new term, MCP, but you could also just call it an API if you want to. That will basically say, look, those databases aren't going to go away, but it's just going to be, you're going to basically abstract an experience. Like you want your HR solution, you're going to ask it like a ChatGPT tool. It's going to be like talking to ChatGPT, and it's going to say like, I need to know what kind of healthcare benefits I get. You don't need to go into Workday or go into Oracle's HCM solution or any of these others. You're just going to ask a front layer, and you're still going to use the database from Workday, and you're going to use but it's not going to be like, I need to go app to app to app, or Bill likes to call them chair swivels. But I will just pivot really quickly and say, because I did talk to the CFO of IBM yesterday, another rock solid company. They got smashed because of Doge. They got doged. But if you actually looked at their earnings, why I like IBM, and I've liked them for a while, is they're doing amazing AI innovation. But there is this massive consulting part of the business that you actually have to, like, there's so much work to be done to enable companies to make the pivots to what like we were talking about with Bill, with ServiceNow. You can't just like turn overnight from a legacy software company. The companies that can actually offer the software and the consulting are very limited. By the way, you know who else does this really well, Shay and Katie? Palantir. I know it's very hard to say in the same sentence IBM and Palantir, because like one is like super cool. Everyone watching this show is like, I love Palantir. IBM's like grandpa's company. But at the same time, like Watson, the innovation, the fact that they have this really big consulting org that can integrate with all of the third-party companies. And by the way, they actually are growing very slowly, albeit, but I actually like them. They were awesome during quantitative tightening. IBM was one of the best market performers in 22 when the whole market capitulated. This is a company that actually I think can thrive in uncertainty.
Well, can I ask you this, Daniel? Because I agree with like your sentiment on IBM. I actually like it's Grandpa's favorite software play for a reason, and it's doing a great job. But ServiceNow, like I was hoping for like maybe a bruise or a black eye from Doge on ServiceNow, but we did not get that at all. Like they landed 1 million plus federal contracts.
30% growth, public sector.
Right?
Wow.
Like so why is their government business compounding faster than anyone, myself, expected, where you saw IBM kind of
well, one is consulting contracts versus software contracts. So consulting contracts are kind of that's hard because even though it wasn't huge dollars, those dollars definitely go away. Bill and I talked about this, and he talked about it on the report. So I'm not sharing anything he said to me privately, but he was indicative of the fact that basically they're having really positive conversations with these entities. And even if there are some licenses that weren't being used, they're going back to them and basically finding applicable ways to get this software to use. So meaning instead of like, like we're going to just turn this off and be done with it, ServiceNow is actually using this as an opportunity to get in deeper with these public sector entities and actually turn kind of, I always say the best relationships are built in the foxhole. This is the foxhole. This was a tough moment. Hey, we got all this software we're not using. Well, let's talk about how we can help you. And I'm getting the sense that that's what they're doing a really good job of, is taking this kind of negative moment and turning it into a really great growth opportunity with a software that I think the government can benefit from. This is where we're seeing Palantir crush it. I think ServiceNow could be another one of that level about beneficiaries from this transition.
Well, I think the real highlight of what you just said is they need a platform that can work across silos and plug into legacy chaoses, and that's what that's what Palantir does more on the industrial side, but that's what ServiceNow essentially is as well. Like they plug into those silos through a unified platform. And exactly. I do think like if you're looking for a company that has figured out how to make AI practical, especially at scale, growing 19% in a tough macro, like ServiceNow is the blue chip SaaS company out there. And they validated themselves.
They're basically doubling growth of most of the establishment enterprise
Crazy.
SaaS, a little bit double plus, which is pretty impressive.
Daniel,
Crazy.
to your comment about the consulting, I had a chance to interview Gina, their CFO, last year, and I had asked her, like, are you guys trying to take out the big consultancies? And she's like, actually the opposite. There's armies of people hired at these companies. They're just focused on implementing ServiceNow. Do you see those relationships as an advantage for them versus like what IBM's trying to do all in one shop?
Well, yeah, I mean, IBM juggles it pretty well because they have close relationships, but ServiceNow, and they brought in Erica Vellini on their ecosystem and partner side to lead that business, and they are very focused on building this really robust partner ecosystem. And by the way, all the really strong enterprise software companies get that. They cannot scale, so they're all going to want to have a good relationship with the Accentures and the Infosys and these guys. They can't achieve it. But they are trying to obviously control more of the stack, meaning like, for instance, like there was a period of time where ServiceNow was nowhere near a database. Now they're basically saying we're going to build a data fabric with RaptorDB, which is a total pivot. But they understand he who owns the gold rules, I heard this last week. Well, in this world, he who has the data or owns the data rules. And so the fact that they are building a data fabric is going to be a powerhouse. And then of course they're saying, but we can still connect to Oracle. We can connect to the cloud provider. Like we will partner, we will work with ecosystem, and we will of course build our own. And I think that's a pretty good approach. Right now, there really is no ability to thrive as a pure point solution. I really think pure point solutions continue to need to expand and platforms continue to be the winner.
No, I agree with you as well. And talking about the next heavyweight that's going to be on everyone's eyes is Google. Let's talk Google, because you and I spoke briefly yesterday, and I was communicating, like I had some like worrisome channel checks. Like I don't know how cloud spending is going to be in this kind of macro. Like yes, ServiceNow's positioned better in this kind of macro because of their business model, how it works, the licensing, like it's more predictable. But cloud spending is somewhat consumption based, and it's somewhat exposed, vulnerable to business spending environments. And right now there's a second guessing that's happening across the board from C-suite, and that's going to affect cloud spending potentially. So like, what is your take on Google's earnings this afternoon?
Yeah, I was with Thomas Kurian last week and a half ago, and actually asked him some of these questions. And remember, Google Cloud went from 5.8 to a $50 billion run rate since he took the helm, almost 10x the company. I mean, they're on an incredible trajectory. They've diversified their service. They've been very multi-cloud centric, meaning that while other cloud providers, kind of like the biggest, of course, being AWS, was very resistant to it, Google really embraced it with open arms. And remember, there was a period where no one really thought Google was a legit. It was kind of Google and Oracle were like off in third and fourth in space. And Google has become a legit part of the kind of big three. I do think we'll see some slowdown. I don't know that we're going to see as much this quarter. We might, because the cloud contracts aren't that malleable. They are pretty rigid. And so these companies can't just cancel contracts quickly. If you have a cloud contract, it takes time. Those cloud credits accumulate. You have to buy capacity in advance. It's kind of punitive in a lot of cases with these different cloud companies if you try to like meaningfully pull back capacity. So the consumption's a bit of a myth in some ways about how that works. I mean, same thing with the SaaS companies. Like you can't just be like, oh, I'm done with Salesforce now. I'm gonna cut my cost in half this month. It's like, no, that's never gonna happen. There's some similarities with the cloud companies. Look, I think the overall cloud number will set the kind of tone of the market. And if their numbers underneath what's expected, it will cause a bit of early whiplash. Having said that, I think the way they can make up for it is potentially by talking about AI consumption, talking about agentic adoption, because everybody wants to know that those tens of billions of dollars of CapEx investment are starting to turn to revenue, because that's the real exit, the exit launch for all these companies coming out of what is going to be a slowdown. Like, let's just be very clear. Like, we've slowed the economy somewhat intentionally. I mean, we sucked trillions of dollars out of market cap. We've pulled back earnings estimates, which we kind of needed to. Remember, we were spending at a $2 trillion deficit. We also realized that most of the growth that's come over the last half a decade has been government spending. It hasn't actually been. So you slow all that down, and you're going to slow the economy down. I still think the enterprise AI companies and then the parts of the cloud companies that are enterprise AI centric should be resilient.
No, I agree with your sentiment. I love it. I also want to pick your brain on this nauseating narrative on Google where everyone talks about the headwind on the consumer side of their business. Like, oh, AI is going to cannibalize their search, like blah, 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 blah. Guys, like, it might go from 95% market share to like, fine, 80%. Great. Do you guys see what's hardening under the surface on the infrastructure side? Like, they are perfectly positioned to AI agents, just like what Daniel was saying. Like, agentic AI is going to flow eventually after all these billions of CapEx dollars. Position with your Gmail account, Google Docs, etc. And they just made a huge acquisition. Hopefully it goes through. Fingers crossed. But Wiz. Wiz is the golden child.
Well, they didn't make the acquisition yet, so remember that. They got to get that done. They got to get that done, Shay. But I've been skeptical with this kind of tricky macro and this unknown sort of policy space on antitrust, even though there's no reason from a security so fragmented, it should get pushed through. I know the bell's about to ring. I just want to say one thing though about Gemini now has 350 million MAUs. I shared this post from Deirdre Boza yesterday from CNBC. I know ChatGPT is at 600 million, but a lot of people don't realize that, like, they're kind of like saying Gemini's way behind. It is closing the gap, and they have such an inherent advantage because everyone that still uses search, which is most people, they aren't using generative tools. They're just using search. Now we're getting generative experiences in their search. I think Google is the dark horse to come out and actually run past OpenAI because they own the platform. So the regulatory environment's really important to Google. Because if they lose Chrome or anything that happens with Android, but like the fact that they own this ecosystem, there's no way they can't just absolutely bombard people with generative experiences and win them over. And they're doing it with their own infrastructure, with their own Ironwood, the new TPUs. Like, they are literally the full stack company. I'm super optimistic, and I think they've been absolutely beaten to death with all this regulatory in terms of price. Right now, it's one of those companies I don't think you go wrong if you put it in your portfolio. Of course, not investment advice, but like, I don't know. I'd buy it.
It's the most disrespected stock in the market. It's always the dark horse. I don't understand why it is. It just always is. It's being traded at 18 times their operating income. Like, that's wild to me. It's crazy.
It's a good point, Daniel, on the installed user base. Like, I use Workspace in my business, and they just give me a ton of Gemini tools that are as powerful as the souped up GPT, but for free. So they don't have to go acquire people.
And you're experiencing it just completely on accident. Like, people that don't even know they're using generative now, when they do a Google search, they get those generative outputs. So they're building this sort of symbiotic relationship that Google and generative and search are all one. And of course, Sam Altman's going to build search. He's going to replace X, and he's going to also replace NVIDIA. But in another parallel universe, none of that's actually going to happen.
Amazing. Well, I know you both have a lot going on. Shay, are you going to go, like, maybe do a horse carriage ride at Central Park or something? You got big New York plans today, or?
Yeah, I'm going to go.
M&M shop, Times Square.
I need to make a trip to Cat's Deli. Like, I love cats. I got to make a trip down there. So that's probably going to be what I'm going to do first thing after I stop working.
All right, we'll get it done. Daniel, you got to come back soon. Everyone else, stick around because now we are going to interview. Guys, thanks so much. We'll see you soon.
Thanks, everyone.
And now we're going to bring in our guest, Olivier Roussy Newton, which I learned how to pronounce about 20 minutes ago. Olivier, how are you?
I'm great, thanks.
Olivier is chairman and CEO of DeFi Technologies, founder of Hive Digital Technologies, Volatility Structured Products, Latin Capital, EV Technology Group, several other ventures. Sounds like you got a lot going on now and historically. Also, that's a lovely background you have there.
Thank you. Yeah.
Very chill.
We're emerging from spring into summer here in Switzerland. So
beautiful. Absolutely beautiful. Well, thank you so much for diving in today. We've been neglecting, I feel like, crypto for a bit because there's been so much drama in stocks. And so I'm glad you're here. We can start kind of digging back into this side of the world. So I want to start by painting a picture for our viewers. You've been in tech for a while, in finance for a while, obviously founding DeFi, Hive. Just let's get to know you a bit. What ignited your passion for DeFi specifically? And how did this become sort of the central focus of your career?
Yeah, no, I think, this goes back to really high school for me, where I got kind of immersed into this world of open source technology. I think I was around 13, 14. The first iPhone was introduced, Facebook first came out, and I saw all my peers kind of consume, basically kind of become addicted to this technology platforms. I wanted to be on the other side of the trade. And I'm originally from Vancouver, Canada, so I realized I could essentially kind of skip school by requesting invitations to technology conferences that were occurring in the Bay Area, San Francisco, Palo Alto, and got kind of immersed into the technology landscape, where I kind of built up an open source gaming engine that eventually I exited quite early. Had the decision to go to university or continue building, and I said, hey, maybe I'm good at identifying open source technologies, and that led me to kind of discover Bitcoin in around 2010, and kind of quickly thereafter was spending my time in between London and mainland China. Got exposed to the early kind of nascent ASIC mining industry for Bitcoin. Thought it was extremely cool. Started doing that, and operations got bigger and bigger. We were looking for capital. At this stage, 2014, 2015, our mining operations were printing money, and we were like, okay, let's raise money, right? Banks wouldn't lend to us. Venture capitalists were just setting up kind of their blockchain funds, doing like $250,000 ticket sizes. We were looking for a few $100 million, and being Canadian and being exposed to successful entrepreneurs, specifically in Vancouver, I kind of thought to myself, well, all of these, the most successful kind of Canadian entrepreneurs, or most of them, are mining entrepreneurs, traditional commodity mining entrepreneurs. So why can't I do what they do, which is just list my mining company on the stock exchange? And so, it wasn't easy. It took about a year and a half to go through kind of all of these regulatory hurdles, and partnered with a legendary kind of mining financier responsible for starting the largest gold company in the world, and he helps me kind of take my kind of concept public, and so yeah, Hive was, I think, probably the first crypto equity to list on the traditional stock exchange, and it was a euphoric launch, and then a significant, I think it was a 98% equity drawdown over 2 years, but we kept on building throughout that cycle, and then eventually kind of the stock went back up to a $3-4 billion market cap, when I decided to look at doing something new. And in the summer of 2020, I observed our Ethereum mining output revenue production quadrupled, like out of nowhere. And I was like, let's figure out what's kind of occurring here. And it was basically the advent of really the first practical use case of blockchain technology, aside from 2017. You had this kind of wave of ICOs, which were primarily, or a large part, fraudulent, but that kind of ignited kind of the rise of Ethereum, and now people were actually kind of abstracting meaningful traditional financial applications and deploying them onto the blockchain. And so I said, similar to what we did with Hive, there should be, there's a lag between what's happening in the crypto world and what's happening in the institutional capital markets. So why not create a specific, public construct for decentralized finance? And this coincided with basically a company I had co-founded called Volatility several years prior, and Volatility was co-founded with a Swedish entrepreneur and great friend of mine called Johan Wadenström. I had, fortunately met him in 2017. He was selling his company called XBT Provider, which was basically the world's first Bitcoin ETF, which he created in 2015. I said, why, you're crazy. Why are you selling this? There's going to be thousands of products, not just Bitcoin. And people are always going to, trust their stock exchange, their broker, or there's going to be a demographic of people who want to interface with digital assets through regulated stock exchanges. So we started that company in 2017. It basically got approved. Our products got approved for listing, and we amalgamated Volatility into DeFi, which essentially is now kind of a vertically integrated trading company that's publicly listed as well in Canada, and hopefully with the changes in the U.S. Can make a leap over to the U.S. capital markets now.
Yeah, and Olivier, I talked to Shay earlier this week because we both are like study crypto. I'm sort of in it. He's not in it at all. And I asked him, I was like, what would it take for Bitcoin specifically to be one of these core themes you chase after? And he was saying the practical use of it. And I know Ethereum, there's the direct blockchain. What do you think that practical use that'll push people like Shay over the edge would be? Is it commerce? Is it something else?
I think he's missing the point. I think I kind of, to be completely honest, Vancouver, Canada, there's this was pre-legalization of marijuana, but there was a big kind of like counterculture movement that I grew up in, distrust in government. This was when I was like 15, 16. So kind of, that all tied into kind of my, I think my kind of passion for Bitcoin and decentralized cryptocurrencies. And I'd spent so much time in Silicon Valley. The first Bitcoin meetup I went to in Amsterdam was entirely different.
What? How so?
How so? Like it smelled like marijuana.
Okay.
Guys were showing me how Bitcoin works by buying ecstasy on Silk Road. It was like nothing like I saw, but there was an insane amount of passion for governments are going to collapse, people are going to need Bitcoin, and that is a store of value thesis. And I think you're seeing it play out in real time with what's transpiring in the world. We saw it. I remember my first large kind of. I think Bitcoin went from $60-$70 to several $100s when all the Greek banks defaulted, right?
Was that 2014 or something?
2014.
Yeah.
Okay. Yeah, and that was like the first wow, this is gonna work, and this is gonna be a hedge. And now you're seeing kind of gold ripping to all-time highs, and obviously there's similarities for gold to to Bitcoin, but I think that we're seeing kind of depreciation. I've held U.S. Treasuries and USD in my bank account since I can remember. I'm out of USD and out of U.S. Treasuries.
Wow. So you're the reason. Kidding.
All it takes is it's the ripple effect, right?
Yeah.
But so in transactions, commerce, people need a reliable alternative store of value, and the prognosis and the technology behind Bitcoin is effectively kind of proving that.
Yeah.
I think we'll see kind of further iterations. Like we're still very early in this experimentation of digital assets and currencies, but you see, like I would have never imagined a world where you have all of the largest bankers in the world putting together SPACs to buy as much Bitcoin as they can, right? and all of these other confluences of events. So I think Bitcoin as a store of value is a great experimentation against clearly, I don't want to say ineptness but there's a lack of transparency across governments globally, and people are waking up to the fact that they can't trust that. And then other applications and layers are emerging within all of these ecosystems, and our company tries to profit off the volatility through our trading desk, but also offer exposure securely for people who want access to these things.
Yeah, you're right about the evolution. Bitcoin's not on my radar in 2010, but I remember in 2014 I was at the Slush conference. I don't know if you're familiar with Slush. It's a really fun tech conference in the Nordics.
Yeah.
But that was there in 2014, and I remember I bought Bitcoin out of an ATM. That was one of the first ones, and I think that, from the kind of stoner hangout you were at initially to me putting literally like a cash into a machine, I think that says a lot. I want to ask you about what you think of these companies like GameStop and Strategy loading up on Bitcoin on their balance sheets. Do you think this is something that all companies should be doing?
I think there's a lot of, I've been in the capital markets now since I was 23 when I listed Hive. So I think there's a lot of interesting capital structures that you can take when you're publicly traded. A lot can be dangerous as well. Convertible, formats and things like that. So Bitcoin's a volatile asset class, and I would hope kind of I've known the team of Bitfinex for many years. I know their kind of intention is extremely genuine in terms of they just believe Bitcoin is kind of this store of value that needs to be the digital reserve currency. But of course, when there's money to be made and stocks go up, you obviously find kind of ambulance chasers or people kind of doing things to move their stocks. And I think without thinking some of these things through, and the specific financing structures that companies are taking on to acquire Bitcoin, I haven't looked at them too much, but I think they're being done quickly, and they can potentially backfire as well, right?
Interesting. I want to pivot quickly to DeFi, because we've had you guys on the show for a bit, and I could go on all day with just on the philosophical. But let's talk about what your company actually offers. What do they do? A lot of people know DeFi as a buzzword. How should they think about DeFi in the context of DeFi Technologies? And why do you believe that you guys are kind of reshaping the financial landscape?
Yeah, within, I would say, the digital asset space, there's kind of a subsector called DeFi. For me, DeFi stands for decentralized finance, and that's the abstraction of Bitcoin's blockchain technology to basically anything and everything. So we, learning from kind of my prior experiences running a mining company, Bitcoin and Ethereum mining, were very CapEx intensive. You're diluting shareholders, you're depreciating your equipment that is basically reintroduced every 6 months by suppliers like Bitmain. So it's a hard treadmill to essentially kind of continue to maintain. I wanted to learn from that experience, but have a very lean and mean, highly profitable company focusing on trading, derivatives, products. So we have several different subsidiaries. One, Stillman, which we recently acquired, is a OTC market making company that is growing extremely quickly. We have our own internal trading desk called DeFi Alpha, where we look, at systematic, zero risk, basically trading opportunities. And our largest subsidiary is Volatility, which is our basically exchange traded product platform. You can think of us as a mini BlackRock, but we do not operate within the U.S. So we provide our products in the Nordics, so Norway, Denmark, Sweden, Finland, France, the UK, Germany, Switzerland, and we're currently opening up new markets and territories in Africa, Middle East, and Asia. And all of these specific regulatory geographies have been more open to all of our products that are being listed. So we have about 60, soon to be 100 products listed in Europe. So when you go through the top 100 coins, obviously we don't have all of the different coins, but we have a characterization, and from a regulatory perspective, liquidity, a number of checklists, but we provide the most cryptocurrency products to individuals through regulated stock exchanges.
Yeah, and so it's you guys are giving sort of institutional level access to everyday investors. I'm curious, this might be obvious for someone deep in your world, but is it this access isn't possible without an intermediary like you all, or there's just the extent of this and the level of investment, there's so much to it that it makes sense to have someone like a DeFi Technologies to simplify it, productize it, and then offer it? What is what's the value prop that you guys offer?
So we have indexes, we have baskets of products, we have single note, ETFs, they're called ETPs in Europe, but it's essentially an ETF. And for the either retail investor or institution that is not allowed to trade through a cryptocurrency exchange, we give them that regulatory security to get one-to-one exposure to the existing products that they would not want to do through a cryptocurrency exchange. I mean, it wasn't too long ago, FTX faltered, and all governments, specifically in Europe, US, Canada, you have to file taxes, right? So if you're buying crypto and using a crypto wallet and things like that, that's another layer of complexity, and those are things you have to declare now. Whereas if everything's in your brokerage account, it makes things a lot more simplified. So we also provide research. We have a research subsidiary I forgot to mention called Reflexivity. So we provide the most accurate research for our end user, so they're informed about what products they're purchasing, what trends we're seeing, and we really just try to make it simple, secure, for the average person and or institution to access the latest and greatest product, right? And I think there's obviously interesting trends that are happening, but Bitcoin's cool, but human, people want more than a 2x.
Yeah.
So
yeah, that's like a 5-bagger now is lame.
Yeah,
Shay and I talk about this all the time. It's crazy.
Yeah, exactly. So oh great, people, people, sometimes we see what are new products, what am I going to do, just make 2x on Bitcoin, right? So we always try to vet, and we specifically work with a lot of the crypto foundations on introducing new products. So we have a good relationship. There's a very cool product called Core. It was basically, you can tell your colleague about this, but it allows for non-custodial staking on Bitcoin. So you can basically hold Bitcoin and earn yield on it. And
interesting.
We've abstracted that into a product. So you can buy our Bitcoin ETF and receive just under 6% in yield. So we're trying to kind of, we're at kind of, I would say, kind of, version 1.0 of what crypto products look like. And then when you bake in all of these algorithmic capabilities and then, refine them into products that people can easily purchase through their, eToro, brokerage account, Robinhood, and equivalents here in Europe, Asia, then, we see a very large market for that.
You alluded to trends. I'm always interested. We had someone from eToro on earlier, someone who has like line of sight across a lot of behavior activity. Is there anything within the products or types of products that surprised you or would surprise people to hear certain asset class, certain genres within crypto?
Genres within crypto, I think it definitely kind of like fluctuates and rotates, but I think, people, for me to have seen and witnessed kind of the birth of Ethereum and seeing kind of that whole kind of, I would say, investor segment move over to Solana was something I didn't expect, and we can kind of see it based on what people are selling and buying. I think there's a lot of interest in artificial intelligence on chain, similar to, the other, people we're talking about, the Sam Altmans and the worlds and stuff. And I think AI is a great kind of core use case for blockchain technology because, can you trust Sam Altman? I think, a lot of people wouldn't. And there's a lot of, there's projects like BitTensor that are kind of basically at the, building out the ability for, basically the AI, the AI chain specifically to be modeled like Bitcoin for some of these properties that we've seen a lot of interest in. And then, people, have obviously kind of come and gone with, specific kind of meme coins and things like that. But I think there's definitely a big shift to real value. But the biggest not shocking, but the biggest kind of thing that always takes me back when we're looking at our data is net new inflows versus outflows. Like our demographic of customers are really holding these assets for the long term. They're not trading. Obviously, there's a segments. There's institutional orders we see that are quick flips and things like that. But I would say 90% of the customer base, when Bitcoin drops, they buy more, and they're really holding these things for the long term. And I think that's also one of the selling points of our products is they're optimized for specific geographies, and you can put these things in your tax-free savings accounts and equivalent structures that all different countries have, which is hard to do when you're just holding Bitcoin with your private key, right?
Yeah, it almost sounds like a converter when you travel, sort of. They're giving you access to in other formats, other ways to the similar source, but you kind of have to finagle it differently. I want to ask one more question. I know we only have a few minutes left with you, but I think something like someone like me, I'm like interested in crypto. I own some. I'm not an expert. And Shay and I talk about this a lot on the show, is like the stories that people aren't talking about that are so important in the public markets, in crypto, and a lot of crypto headlines. It's the meme stuff or government. Like, what is like a story or theme that you think is really important in crypto right now that not enough people are talking about or paying attention to?
Well, I think just the fact of what's transpiring in the world and why kind of Bitcoin exists is these specific moments and tensions. I think that's somewhat overlooked, but I think typically you see At least for the last, few cycles, you see this kind of run in gold, and then you see Bitcoin outperform, gold's run and things of that nature. But I think kind of I would want to, think, or I would want to maybe highlight kind of the innovation thus far, and where we can actually kind of go with things, because we're just coming up with these kind of new capital constructs. We work, we're listing our products in African countries that want to essentially kind of sovereign wealth funds want to purchase Bitcoin. So I think there's this huge seismic shift of the adoption of and potentially replacement of treasury bills to other forms of value, and what derivatives will be created on top of that. We're only kind of really scratched the surface yet, right? You have MicroStrategy just basically buying, raising debt and buying shitloads of Bitcoin. But will there be like more efficient mechanisms to potentially get leveraged exposure to new store of values? I think I would like to see kind of more of an intellectual debate around that progressing in the future.
You sort of alluded to it, but do you think your products will benefit from the shift away from treasuries?
Absolutely.
Or products like
we're seeing inflows, right? People want to be able to sleep at night, right? So I definitely think we will be kind of refining these things, but I think there's also a lot of interesting kind of derivatives, and we're looking more into baskets and products, right? So packaging things that might be more vanilla but with more esoteric kind of wrappers. I think you're just scratching the surface. Like, well, what does, we're working on kind of a Bitcoin gold product, right, that has a specific balancing ratio. We might be looking at one with silver. So I think and this is this whole nature of kind of real world assets, and how those come kind of onto the blockchain, and how you mix all of these products together is really what keeps us up at night, and also interested in what we're doing, because we innovate, we put out products, we see in real time what's working, and what people are appreciating.
Very cool. What a cool place to be building right now, and really appreciate, Olivier, you popping in. I know we covered a lot of ground, so thank you so much. Olivier Roussy Newton from DeFi Technologies, he's the CEO. Thank you so much. You'll have to come back.
Yeah, sure.
And to everyone else, that'll do it for me with you this week. But tomorrow we have Daily Rip Live. Don't forget. And I hear they're going to have a very special guest. You guys are going to want to tune into that. I will see you back here next week, and I'm sure we'll have a lot of stories from the Cash Tag Awards. Take it easy, everyone.